Welcome back to another Wealth Wednesday. I'm back with another video. This is Corey Phillips again. I'll be solo tonight. I won't be here with Justin and Sean wasn't able to make it, but we're going to continue to keep going on with the show and just be back for another episode. There's a lot of things going on in the world, and we're going to continue to build, continue to educate, and continue to empower people across the world. So again, my name is Corey Phillips. I'm a 22-year-old entrepreneur. I'm economic development, financial literacy across the world. And I'm here again with this episode to just empower you all on how you truly build wealth, because there's so much going on in the world, but it's how we can continue to use this information so that we can become successful for the future. And this is something that we can just expose more young people to what's really possible, and so they can be able to become the greatest version of themselves. And there's so much positivity going on. I love one person I need to give a shout out to is literally one of the top creators in the world right now is Speed. I Show Speed. For people that you don't know, I Show Speed is a 20-year-old streamer from the United States. He is currently one of the top creators in the world, and he is doing things that has never been done before at this level. So currently, for just context of who he is, he's a 20-year-old streamer. He's currently doing a stream right now. He's doing multiple days in Africa. So he's basically going to, let me look this up. So Speed, I Show Speed is currently doing a major 28-day live stream where he did this in the beginning of 2026, where he's visiting 20 countries like Angola, Kenya, South Africa, Nigeria, Egypt, to showcase a lot of local culture, food, sports, and breaking records and massive viewership and challenging stereotypes amongst the continent. So this is something where I'm just continuing to see is not just about the markets, but just be able to show about narrative, identity, and belief. Something that just shows me is like a lot of young people really don't know what's really in the continent of Africa. I've never been myself, but I've really have aspirations of visiting one day. He's someone who not just explained Africa, but he's someone who actually showed it. The thing about streaming is that it's something that's unscripted. There's an institution controlling the lens, and he's something that he was able to embrace with different villages, embrace with the people, and embrace with the lifestyle in real time. And for many times, people think that Africa was only a place filled with only poverty-driven narratives, hopelessness, a place of no future. But his stream really shows a lot about the world that he really believes in it. And there's a place where eventually even Africans start to believe in it, in terms of where there's truly being a lot more power, a lot more cultural pride. And I just love just seeing be able to immerse in different cultures. That's something that someone, especially in Gen Z, being 20 years old, is something that's exceptional from another like young man, just doing amazing things around the world. So like even where you are now, you may never know where you'll be if you just be consistent at it. He went from a couple years ago living with his mom to now being one of the biggest streamers in the world, which he's doing numbers greater than the Super Bowl, than many of these other things. So he's really doing an exceptional job in terms of marketing, in terms of embracing cultures and building community. So this is matters beyond cultures. That's really important to have, like, understand how much entrepreneurship, basically be able to know what type of things are able to position people to certain places of power. But it's something that's just exceptional from someone in terms of branding, character, and a sense of community. But that's how I'm going to start off this show, with something nice, something positive, and then I'm going to get into a lot of these different things. There's a lot of stuff going on in the world as far as the markets. It's something that we see a lot with President Trump. We see military defense. We see a lot of different things going on. And it's just very important for us to understand these different markets so that we can be able to make the best decisions so we can become successful. It's very, very interesting times right now. Right now, we see a lot of concentration of Let me think. Okay, I'm back. It's very important for people to understand that there's a lot of different concentration that stocks and commodities that continue to be preferred over cash. A lot of support comes from AI momentum, fiscal spending, and easier monetary conditions. As in 2026, we expect a favorable rate cuts moving forward. They're measured, not euphoric. So the mindset is to basically stay invested but manage expectations. So a lot of people think that they're just putting money out in fear, but in reality, they're going to lose wealth just because of the importance of how much money is moving and the devaluation of the US dollar. So if you're really not making your money work for you, you're going to continue to get priced out of these markets. So a lot of these different things is happening. It's very important for people to just understand that you have to be able to stay invested and be able to stay over the course of the long run. You can't really time a market. You can't really time it in the market is greater than the time in the market. So you being able to understand that the longer you can be able to stay in the market, the longer you can build wealth. Another thing is just another big signal in 2026 is that we can see an exceptional year for things like gold and silver. There's been a lot of different higher concentrations of demand for things like silver in terms of technological devices and like artificial intelligence. But as well, it's something that traditionally is like hedging traditional bond hedging is less reliable if there's the short-term rates are fall or long-term yields stay elevated. So as a result, many things like gold remains highly favored, and there's very few firms that want to call an end to gold's uptrend. So it's like a safety net. It's very important that people understand that it's something we look at the upside of different markets, but it's very important to look at long-term trajectory and make sure we have that downside protection in case different things are happening. And this is something where even we talk about the Federal Reserve currently. Right now, the Federal Reserve is basically trapped. Inflation is still above target. The labor market is under strain, but there's a lot of political pressure to cut rates, which is something we've seen exponentially from President Trump and the Fed Chair Jerome Powell. But Wall Street expect a lot of things could interest rates continue to ease, but not aggressive. Okay, we're back. The Federal Reserve has continued to continue to drop interest rates into 2026, but President Trump wants the rates cuts faster, which potentially could cause more things such as inflation and more higher prices for everyday consumers if it's not done correctly. But for businesses, it makes cash borrowing cheaper and allows more people to be able to reinvest profits as far as different businesses. A lot of different people understand that there's a lot of private markets have done very well over the last year. Private equity and private credits are still seen as return enhancers, but Wall Street believes that there's a lot of risk mostly contained. But this basically just knows that a lot of liquidity of different companies are limited, and a lot of expert access and fees are emphasized on a lot of these different things. But we talked about Venezuela a couple weeks ago. And what's the importance of that is that there's a lot of situation in Venezuela as a real-time example of how modern markets process a lot of geopolitical shocks. A lot of equities have been moved on as far as higher risk. And at full time, just continue to see while gold and silver have surged is not really a contradiction, but it's a signal. When gold and silver goes up, it says we're staying invested, but we're buying insurance in case things were to go down, because you don't have all your eggs in one basket if things were to happen. So basically, just understand that investors are not pricing a global recession. They're pricing for higher long-term uncertainty in terms of fragmentation. As we see a lot of more geopolitical things going on in the world, we might see a lot of higher concentration of capital investment to military defense companies. We might see a lot more volatility within a lot of the markets because no one really wins in a war except different companies that have manufactured weapons, military defense, and things like that. But it's very important to look at oil prices. We see a lot of different companies typically have gone up over the last couple weeks due to the oil, such as Chevron, a lot of other companies like that in the oil industry have went up, but over the course of time, it's something that they're just basically over the course of time is really not going to matter. You want to be able to not do this trade short term, just look up the short term situation, but look long term. Is that Venezuela is only optional supply. It's not an instant relief, because one thing about Venezuela's oil is that it's a lot thicker, and it's something that it takes years and decades to be able to refine oil. So even if you did theoretically were to use the oil, which it would take a while because you have to be able to refine oil, it's way thicker and it's very expensive. So it would take years. So it wouldn't even be priced into the production for another 5-10 years. So it's very important that it's not something that we have to rely on, and that any meaningful increase takes years and billions of capital in order for it to thrive. And then long dated oil prices may face pressure, but it's not really a collapse. And like I said, looking at the big picture is that there's a lot of safety nets in like gold and silver, but there's declining confidence in rules-based global order. A lot of central banks and institutions are continuing to diversify away from single currency exposure, and gold is basically as a confidence hedge, not a fear trade. So the bigger picture, pretty much understanding that a lot of these geopolitics don't usually crash markets. It just changes what gets rewarded. Like I mentioned, defense, energy, infrastructure, hard assets, hedges gain relevance. And this is something that enforces why it's super important to just be able to diversify moving into 2026. Basically, markets can move forward and protect themselves at the same time, which is very important. We have to look at how things are affected as far as trade policy, many different tariffs, and then political shocks, how the markets can move moving forward into 2026. We can see risks that can deliver everything as be the sudden loss of AI confidence. We have a huge bet on these valuations of these companies in terms of artificial intelligence spending on a lot of these companies like Meta, NVIDIA, OpenAI, Tesla, Google, Facebook. They all have an amazing amount of investment. And it's something we have to be able to see if there's continued demand for these GPU chips as well as data centers, and that narrative continues to move forward. If the spending goes down, a lot of these companies may be at higher risk and continue to have expected gains of future cash flow and future growth in their companies. So it's very important for us to understand that you don't want to just have all your eggs in technology, but understand who are the people that make the tools and shovels and pickaxes during the gold rush. So look at I know that this is possible without energy. So look at who's building the energy. Look at the people who are building the data centers. Look at the people that own the cloud. Look at the people that have all these different infrastructures that's super important, regardless of how many chips are made or how many data centers are built. It's very important for us to look at many different frameworks. It's super important. If I was just understanding that just AI continues to remain dominant force for 2026. Markets are expected to rise, but cautiously. Diversification is encouraged, but not yet proven. We can continue to see that a lot of alternative assets and hedges matter more, and a lot of things like markets, confidence, and geopolitics are the real fault lines for a lot of these issues. One thing I want to also talk about is talking about Google. The AI platform war just shifted from Apple with Google. Recently, Apple announced a multi-year collaboration with Google where Gemini models and Google could help power the next generation of AI, Apple intelligence, including new Siri. So this is something that we saw Apple was not really involved in artificial intelligence. So Siri has been underperforming. You've seen other markets do exceptionally well over the last couple of years. So Apple was intentional and went and increased their production with Siri by partnering smartphone distribution, iPhone and Android into a Google advantage, because Gemini already lives across Android, but now gets a major lane into Apple's ecosystem. They have reports many that $1 billion a year is possible, $1 billion a year possible licensing figure, not confirmed by the companies, but the meta lesson is that AI dominance isn't about the best model, it's about the default placement, platform integration, who owns the interface layer as far as artificial intelligence. A lot of different deals going on as far as things like that. It's just important just for people to understand that the whole entire landscape of technology is changing. And if people are not able to adjust, continue to focus on things that actually matter, it's going to be way harder for people to come back and basically continue to catch up. The biggest thing is that looking at another aspect I was talking about, Fed independence, has become a market variable, not necessarily background noise. The DOJ has issued grand jury subpoenas tied to Powell's testimony of the Fed HQ renovation. Powell has been framed as pressures connectivity to rate policy. So a lot of different, we see President Donald Trump is continuing to go at the Fed chair, Jerome Powell, as he is saying he claims he's not cutting interest rates fast enough. But Jerome Powell has continued to push for lower interest rates, just not at the highest percentage that he has warned. So there's a lot of global central bankers and Wall Street CEOs publicly back Powell. But it's a rare signal that markets see as a bigger than just politics. Important, just in honesty, want to just know that it's important that he was appointed by President Trump and reappointed for a second term by Biden. And why markets care is, like, if investors doubt Fed independence, long-term yields can rise and gold can stay bid, while even stocks hold up. There's a lot of risk plus insurance and many different things. So it's very important for people to have confidence in terms of the Federal Reserve, because if the thing is, the Federal Reserve is supposed to be central from United States government. So like other countries where there's kings and queens, they typically might be able to control the Federal Reserve based off of how they feel or type of controlling their monetary policy. But in the United States, it's meant to be decentralized away from the president and other branches so that it can be able to be independent from the U.S. government. So it's very important that this is something that can continue to affect the markets moving forward, as President Trump will announce a new Fed chair later this year. We will see this continue to develop. The more thing is that biggest thing I was talking about is that there's a huge increase in military defense spending. It's becoming its own macro force. Trump has proposed $1.5 trillion in defense budget for 2027, which is up from $901 billion in 2026. It still requires Congress, but ratings and budget analysis warned that a lot of debt financing spending could widen deficits and keep bond market sensitivity high. This basically just shows that more spending can lead to more contracts and activity, but also pressure more inflation expectations and long-term rates on how it's financed. So you see a lot of different companies that's in military defense, like Palantir, Anduril, Lockheed Martin, Boeing, many SpaceX, can get more and more government contracts as there's going to be more military defense spending, which can cause those companies to continue to rise in valuation. And the other thing is defense spending, real assets in second order. It's just super important for people to understand that these many different things are happening. But how can you prepare so that you can be ready, so you're not in a situation where you're just waiting and not positioned to become successful? A lot of these companies continue to be positioned as far as artificial intelligence, as far as technology, but understanding that the whole bigger picture is just about how you can set your family up for success. How can you go and use this information that we talk about in order for you to implement this into your own life, for your own goals, for your own community? Because it doesn't do any good if I just talk about this and no one able to implement it. It's about how we can be a collective force in what we're doing in order for us to be able to invest towards our future. It just starts with our mindset. It starts with being aware, starting to read the Bloomberg, read the Yahoo Finance, be able to go and talk about this so our kids understand what this means for not just now, but for our future kids. Economics, finance is what runs the world. Anything from streaming to sports to movies, everything revolves around money. And being able to control and understand and manage and grow is something that's the most powerful things that you can do. You can be able to build communities. You can go and start your business. You can go and impact more people. You can go and travel. The more that you can be able to lose the information, especially things are going to get more expensive. The world is getting more volatile. Things are going to happen, but being able to have this certain amount of financial security, financial freedom can allow you to be able to do what you truly want to do in your life. That's one thing with me. I've always loved just being able to see other people be successful and live their life fully to what they want to be. You don't have to feel like they have to only go to corporate America to basically say how valuable they are in terms of where they're going to go. But it's about how you can live your life on your terms and know that your family and your future is going to be taken care of. But we have to have these different types of conversations. We're tired of having the nonsense type of conversations about the podcast about men versus women. But how can we work together as men and women to build families? How we can use this to go and educate our communities. To go and stop talking about each other, but actually work together. That's the biggest reason why I like teaching this information and how we can continue to grow, we can build and rebuild our communities moving forward. So this will conclude my Wealth Wednesday. Make sure to like and subscribe and share this out to your friends and family. It was a short episode, but we'll be back soon. Make sure to like and subscribe, and I'll see you all later.